My name is Simon Evenett. Let me introduce you to this Project Firefly sponsored debate. This is a HOLT Community Competition debate that we're holding this afternoon. I'm joined by three bright young talents who are going to participate in this, and I'll introduce them later, and also by my colleague on the Academic Review Board, Professor Pascal Gantenbein. But first, let me let you in on what the debate is going to be about. This is a classic David versus Goliath situation. We have enormous, profound developments in the market for automobiles, in particular for individuals, and with Tesla coming up with a range of innovative products and taking on some of the bigger giants in the field like Volkswagen. Now we have this disruptive technology, and of course this is going to have implications for the corporate strategy of these companies, but also for their financial performance and therefore for their valuation. And indeed it will be interesting seeing how well our participants can connect those three things. Now when I looked into the performance of these companies recently, of course I think Volkswagen is the one which has been in the news, with their chairman resigning very, very recently after a continuous spate of boardroom battles. But Tesla itself has been having some challenges, which I'm sure will be discussed at some length here. Now, let me just say that in our discussion, what we're going to do is sort of evaluate or critically evaluate the relative performance of these two companies and also think about their future prospects. So that's by way of introducing the debate. Let me tell you a little bit more also about the HOLT community which we've put together. This is an initiative which Project Firefly has undertaken with Credit Suisse HOLT, and we seek to give bright young talent an opportunity to demonstrate their financial skills and also to engage in initiatives which helps them build their own personal brand, and doing so not only on our website through our competitions, but also in our LinkedIn page, which I see is just going from strength to strength, I think now with over 1,100 registrants and participants in. So the broader context here is that this particular competition and debate is part of a sustained initiative to give bright young talent an opportunity to shine outside of their university courses. Now, none of this would be possible without the support of our Academic Review Board members, and I have one of them with me today, Pascal Gantenbein. Pascal is a Professor of Finance at the University of Basel here in Switzerland, and he is a long-standing supporter and collaborator with Project Firefly. He's provided valuable advice on competitions and on evaluating the submissions of a lot of our bright young talent, and I'm grateful that he can join us here. Now Pascal's going to be literally running the debate when I'll hand it over to him very, very soon. But before I do that, I want to acknowledge and introduce three of our participants, our HOLT community participants. These are all the best performers from the recent HOLT community competition, and so we've got the cream of the crop here, and we've got high expectations. Let me tell you a bit about them. The first one I want to introduce is Rakesh Rana, who's originally from India, but is actually studying at the University of Gothenburg in Sweden. And Rakesh has been a HOLT champion as well as an honorary mention in the Emerging Leaders competition of 2015. So welcome, Rakesh. Good to see you. Next up is Ido Duran is joining us from the Belgrade Banking Academy in Serbia, and he's a HOLT partner and has contributed to our discussions and debates. I'm looking forward to hearing what Ido has to say as well, so welcome to Ido. And certainly last but not least, we have Sharmila Rao, who's joining us from Amsterdam at the Duisenberg School of Finance. I assume that's the School of Finance named after the former head of the ECB. And we're delighted to have you with us too as a Project Firefly contributor. So thank you for joining us, Sharmila, as well. So my job now is largely over. I hand over to the real experts, my colleague Professor Pascal Gantenbein, and our three bright young contributors. Pascal, the floor is yours. Thank you.
Okay, thank you very much, Simon, for the very kind introduction. I would also like to extend a warm welcome to my online guests in this debate. and I'm very much looking forward to an interesting discussion with you about these two interesting companies. Now, maybe just some introductory remarks from my side. When we look at Tesla on the one hand and Volkswagen on the other hand, these companies are certainly very different in many, many aspects. So when we look at Tesla, maybe just to start with, that's a company founded just in 2003, so it's a pretty new company, made its IPO in 2010, and in a way is clearly driven by one individual, Elon Musk, who is also seen to be an entrepreneurial icon, and maybe also because he's an outsider to car manufacturing, probably also drives innovation by questioning established standards in automotive production. On the other hand, we have Volkswagen, founded in 1937, so a pretty mature company, also well diversified, over 600,000 people working there, which also is reflected in the sales volume. So in 2014, we have a sales volume of more than 200 billion US dollar across all the divisions. Interestingly, CFROI, which you all have looked at in doing the HOLT competition, and you know this certainly is it has been quite low over quite many years, but has picked up recently and is now above cost of capital. So roughly we talk about 6%, and cost of capital are substantially lower at the moment. Also interesting, we see quite stable profit margins in Volkswagen, and all this has been accompanied by stock price growth, particularly in 2015, which was quite positive as opposed to the overall market development. Now, when we compare this to Tesla, there's certainly a steep sales growth. We have seen 35,000 units sold of cars, electric cars sold in 2014. Which is a very positive development after previous year's sales volumes. Nevertheless, I mean, we're still quite substantially below expected sales volume. Nevertheless, the volume in terms of US dollar has reached 3.2 billion US dollars in 2014. Until 2012, we have seen quite negative or low CFROI, as you all know. But 2013 has been like a turnaround year. So in 2013, CFROI have picked up quite heavily and are now slightly above the cost of capital in the area of 3.5 to 4%. Also, we have seen a margin increase over this time, and this was also reflected in the stock market development. So we have seen particularly a jump in the stock price in 2013, as you know, a high of 291 US dollars in 2014. Nevertheless, quite a disappointing development, I would say, until March 2015. So we had seen a low on a level of 185 US dollar, but since then, over the past 3 weeks, stock prices have picked up again until roughly 230 US dollars. Now, when we look at the general development, maybe also of the valuation of these two companies, interestingly, I would say we observe an enterprise value, despite of pretty low EBITDA at the moment of Tesla, of nevertheless 28 billion. Which is substantially smaller, of course, than Volkswagen valuation, but quite elevated, and we'll probably come back to this. When we see the enterprise value, the entire value of Volkswagen, we are on a level of 192 billion. Of course, it's a multiple of Tesla, but still in terms of proportion, this is quite interesting. When we set this enterprise value into proportion to EBITDA, at the moment in Volkswagen we are at 8.7, so this is seems to be quite on a reasonable level, typical actually for the automotive industry, as opposed to Tesla, where we have an EBITDA multiple of 621. Definitely not a value which we typically would observe in the car manufacturing industry, so probably there is something else we might get back to in our discussion. So that's just a very brief characterization of the two companies and maybe of some of the key points we'll get back to throughout our discussion. I tried to structure this discussion as follows. So after all of you give your 2 minutes introductory remark and statement, I would like to first come to the business model of these two companies and try to compare these two business models. In a second round, we'll then have a close look at the competitive environment. So not necessarily just competition between Tesla and Volkswagen, rather where do these companies stand in their competitive environment in whatever will turn out to be relevant after we have the discussion about the business model. The third part will be on the macro environment and also the demand side. I think that's quite interesting when we particularly will have a look at the developed markets and developing markets. And then certainly the core part will be the fourth one on the topic of valuation. So that will be like the anchor point, and we'll finish by a risk analysis and an outlook, and maybe also discussion about the challenges of these two companies. So may I just invite you to give your 2 minutes introductory statements. I would suggest we start with Sharmila, then Rakesh, and finally Edo, if that's fine for you. So Sharmila.
Hello everyone. I would first like to thank the panel, Project Firefly team, and HOLT Credit Suisse for making this possible. And a big hello to my fellow participants. I look forward to an interesting discussion and insights from both of you. What I would like to start off with saying is what I concluded in my essay, which was, I think in the medium-term perspective, Volkswagen makes a better investment than Tesla, and the reason why I state this is I have implicitly questioned the two views that the market seems to hold right now, which is underestimating Volkswagen's ability to hold its #1 position as the world #1 automaker, and overestimation of Tesla's ability to be a game-changing innovation. So that is the perspective that I have tried to question, and I look forward to discussing the reasons for my views in the debate.
Okay, thank you very much. So I might ask Rakesh to give a short introduction, maybe.
Yes, sure. First of all, thanks everyone and thanks for inviting me for the debate. I look forward for an interesting one. From my perspective, Tesla Motor is a new startup and an innovative startup. They have been pioneered in bringing a full EV sports car into the market. The company, the main strength of the company is it's seen as an innovative brand from the in the market, and people recognize it as an innovative company. And it have a lot of expectations for the future. They have lofty goals. But on the other side, we have not seen so much of deliveries. We only have sold around 35,000 units until last year. And based on my evaluation, the current share price is currently quite overpriced. So there's a lot of expectations riding on that price, and expectation that the Tesla will be able to bring disruptive changes, not only in the automotive market, but also in energy storage units. And if I see for the short-term period of 12 months, I would expect it to underperform. On the other hand, if we go to Volkswagen, it is one of the largest automotive manufacturers right now. They have 12 distinct brands and good market share, not only on the passenger vehicles, but also on light trucks and motorcycles. So it is fairly diversified, very high revenues, but we also saw there is a very high growth rate that they have maintained. They are able to maintain over a period of time, and very good profit margins. And currently, Volkswagen is the share price is being sold for P ratio of 11, compared to the peers of Daimler and Toyota at around 13, and GM and Ford around 16 and 20 respectively. So I think it is very attractively priced right now, and I would expect Volkswagen to outperform in a short term of 12 months. And I would definitely give a positive outlook for Volkswagen compared to Tesla for 12 months period.
Okay, thank you very much. So finally, I'd like to ask Edo to give a statement.
First of all, I would like to thank Credit Suisse and Project Firefly for this opportunity. Basically, I will, when I looked at Tesla and Volkswagen in terms of comparable companies, I found out that even they are in the same industry, they are hardly comparable. In one side, we have Volkswagen, it's a global giant, a larger car maker in Europe. And on the other side, we have Tesla. Tesla is a niche player that produces only electric cars and powertrain components. So in my analysis, I mainly focused on what company have a higher future growth potential, and I choose, in this between Tesla and Volkswagen, I choose Tesla. In my opinion, industry trends and the high combined with high potential growth, continuous innovations of this company and their current positions are the main reasons why, in my opinion, for this opinion. Using HOLT 3-driver flex model, I come up with a warranted price of $281 with upside potential at 48%. Currently, in that time, Tesla was trading in $181. Now is trading at $231, and for just $40 for 3 weeks. So I think I'm in the right direction.
Thank you very much, Edo, for your statement. I think that's going to be quite an interesting start. Yeah. So we have two opposing views actually. The two of you saying that we have a kind of an overvaluation of Tesla, and Edo rather taking the opposite position. Now I might challenge maybe Sharmila and Rakesh in this respect, jointly with Edo, maybe in the first round. You came to the conclusion that Tesla was overvalued, and but don't you think that this is kind of just a short-term perspective that you are taking here, particularly if we look at maybe the technology direction, as many argue that Tesla is rather the future versus Volkswagen, which rather represents some of the past, in terms of long-term perspective, and also in the short term. If I look at the price target of Credit Suisse at the moment, which is set at $290, and also the stock price increase, which we have recently seen, obviously in the Tesla case, coming up from roughly 185 until now over $332 as we are, or $33 even today. So I know short term and long term that this might be an issue, but how do you judge this, both of you? Do you want to revise your statement now, given the recent development, or are you on the defense of what you said, Rakesh?
I would very much like to defend the statement I already made and the valuation I did. I think there is quite a high potential for short-term gains and losses, specifically for Tesla. And if we see the market expectations, the target price from Credit Suisse, it has been 325 and then reduced to 300 for more or less 6 months. And over that period, we saw the stock price falling from around 290 to around 180 as well. So I would say these are short-term fluctuations, specifically fueled by a lot of media coverage about Tesla making a disruptive change in house or energy storage units as well. While we don't really see substantial performance in the market in terms of sales or in terms of profitability, neither on the automotive side nor on the energy storage side. So I would say the current share price increment is mainly speculations, and over the long-term perspective, I would still go with overvaluation at this share price.
Okay, but don't you think, Sharmila, that we have now seen a pretty nice development also of CFROI, and we have known that there is a proven technology, and that's really, of course, it's a different profile, but I think certainly an investment to do.
Right. First off, I would like to question the very perspective that has been held for a while, that Tesla is a disruptive innovation. To quote Professor Clayton Christensen, who is the author of the theory of disruptive innovation, he has denied the allegation that Tesla is a disruptive innovation and has termed it, so to speak, as sustainable innovation, and that it does not meet the criteria of disruptive innovation. Secondly, the sales of Tesla has been less than 1/10 of the total automobile sales. So to question if Tesla will necessarily be a good investment in the medium term as well as the short term, I would want to know is whether the valuations are overhyped, whether the perspectives are overhyped, given the enormous challenges that Tesla faces in the recent next 2 years, given the building of the Gigafactory, as well as the new areas that it is venturing into. So these are the two questions that I did not find an answer to during my analysis. Hence, I maintain my view that Tesla is not necessarily the best of investments given the medium to short term.
Okay, thank you very much. How do you react, Edo, on this? How would you convince your two mates here on the debate that this is an investment?
First of all, Tesla is in a different growth phase of a life cycle in contrast to Volkswagen. Tesla is a new company, and industry trends go in favor to Tesla. We are witness of a rising environmental protection awareness, and the majority of countries, through policies and incentives, drive demand for electric cars in one hand, and pressure traditional automakers like Volkswagen to produce cleaner cars and reduce greenhouse emissions in the process of manufacturing and increase their production costs. Also, we have a factor called sales statistics. Car sales statistics will have a positive impact on Tesla sales, especially in main markets of Tesla, like United States and the European Union. But because of falling sales in Russia and South America, we can expect low sales growth for Volkswagen. Tesla is a different company than Volkswagen, so this is why Tesla is hardly comparable with Volkswagen. Also in recent developments, we can see a new product of Tesla, that's house battery. Many analysts, including Deutsche Bank, think that those house battery will increase $35 to $40 on sales price today.
Okay. So maybe just a question also back to you, Edo. Now, I mean, of course, I've taken the position, to challenge your two mates here. But on the other hand, I mean, I also see some risks actually, as opposed to Tesla. I mean, particularly what you just described, in a way, is also driven by Volkswagen. If I look at all the experience Volkswagen has made regarding the hybrid technology, I mean, we have on the one hand these models in Porsche, for instance, serial models such as Panamera e-hybrid. There has been other Porsche hybrid cars. There is a new model actually on the pipeline called Pagan, which should not just be a hybrid technology, but actually an all-electric rival to Tesla Model S with a driving range of 250 miles and at least as much power as Tesla has. Also, Audi, for instance, there is already running a Q8 e-tron, which is an SUV. So essentially, we have the entire spectrum, so to speak, from hybrid plug-in cars. We have all-electric vehicles which are coming, and particularly also the SUVs. So basically all the models Tesla is providing on the market, which already to some extent do see a rival and from a company which has a far longer background in providing technology. Maybe not the plug-in vehicle type, that's still coming, but I guess that's quite a strong competition actually coming from Volkswagen towards Tesla. How do you judge this?
In my analysis, the main risks was competition. Tesla will need to continue to improve their mobile models and to be in that area better than other companies in order to have a growth in the future. One main risk that is implementing Gigafactory on schedule. Tesla is heavily dependent on that Gigafactory, and but in recent years we can see that Tesla maybe will not implement that factory on schedule, and that will have a major impact on Tesla sales and Tesla's production also.
Okay, so that means you're actually taking a more critical view now on Tesla. Also have maybe a question for Sharmila and Rakesh. I mean, we've also seen that in the Tesla case, they have made a very interesting move, namely that they opened up the patents for their battery production. Now, we're still in the area of business model, and I just want to lay out a little bit more the idea what drives the business model of Tesla. We have seen it's certainly a car manufacturing company, but it is also technology driven. They have a very strong focus on the battery. But having this, it's kind of interesting to see that they opened up the patents in early 2014 to their competitors. How do you judge this? Is this, I mean, you're anyway a little bit more critical towards Tesla. Is this kind of a very smart move which might rescue actually Tesla from a strategic point of view, or is this just a foolish movement because we don't really see this anywhere else, let alone in the pharmaceutical industry? You would never think of opening up your patents to your competitors. So how do you judge this strategic move, which it obviously seems to be? Sharmila.
I think it's a smart move because Tesla is trying to invest in a business model which moves away from simply selling plug-in cars to selling a system, which I think they have recently invested in providing the changeable battery, which allows once the battery is drained to be changed in 90 seconds. So opening up the patents allows competitors to enter into the battery production area as well. So in this way, I think Tesla is consolidating its business model and inviting newer players to enhance its business model rather than placing direct competition, because it already understands that it faces competition from Nissan Leaf and many other plug-in and hybrid cars as well. So I think it is trying to change the perspective of what it thinks is its direct competition, and this would be a welcome move for Tesla. That is my opinion.
Okay. So changing the rules of the game. Nevertheless, if I look at the statement the last year, I've seen that almost $1 billion was actually spent by Tesla in R&D, which in a way doesn't really make sense to me, given the fact that they open up their patents. So maybe do they just have open up maybe old patents, or how do you judge this, Rakesh? How does this fit together? Spending furthermore enormous amounts of money, actually a lot of the money which was generated in terms of financing and cash flow was spent not just in the Gigafactory project, but particularly in R&D. And at the same time, they open up their patents. Yeah, does it really make sense? And maybe to deepen a little bit Sharmila's argumentation, what's behind this? What's the strategic rationale behind that?
I think from my perspective, Tesla opening up its patent portfolio was more or less a smart move from marketing perspective. They want to have a kind of brand image that they are seen as innovative company, they are seen as someone who is leading the market. From technological and strategic perspective, I don't think there were significant technological advances either in battery technology or in production or manufacturing technology that Tesla achieved that it opened up for other car manufacturers. And I also don't see much of an intake or uptake from other manufacturers for that, because there is not really significant technological advances in the patents that were opened up. So it was a smart move from the marketing perspective, but strategically, I think it was very neutral.
Okay, just marketing and not much more. Okay. So we have been talking a lot about Tesla at the moment, and I would love to get a little bit closer to having a look at the Volkswagen. Now, how do you think that the Volkswagen is able to manage competition in the future? Just a short background. If you look at, for instance, Porsche, they have been at the forefront of technological development, as we have already mentioned previously. Audi, pretty much the same. If you look at Skoda, for instance, they have covered quite a large market share of what has been previously been covered by the traditional Volkswagen brand. So how do you think that Volkswagen really will be able to cope with competition? Just a second point on this. If we look, for instance, into more the electric car competition, there is also BMW, for instance, moving very strongly into this direction, both hybrid but also all electric cars. We have Cadillac, for instance, we have Chevrolet, we also have the B class of Mercedes. So I think traditional there's a lot of competition actually in the traditional car making industry, but also in the upcoming electric and hybrid car manufacturing. So how do you think that Volkswagen, the entire Volkswagen company, is able to handle this? So I might start with Sharmila maybe.
Given Volkswagen's current portfolio of brands, I think it is well poised, and not only due to its brand presence in almost every sector of the automotive industry, but also the fact that the automobile industry at the moment is currently expanding in its sales and growth as the world seems to be coming out of a slump. And when the general sales have been increasing, Volkswagen is in a position to sort of exploit that due to its expanding presence in the developing markets, particularly India and China. And as the new emerging middle class comes up in these markets, Volkswagen is very much poised to exploit this opportunity. Also, given its current efficient cost management system, I think it has considerable inroads into giving shareholders a piece of the action in this as well.
Okay, that means that you're not really worried about changes in market share within Volkswagen. That's pretty much okay. So essentially, it's just the Volkswagen company in general, which does have a pretty broad diversification. Do the others share this view? So you have also written this actually, Sharmila, in your statement, in your essay, that there is a certain degree of diversification which Volkswagen can benefit from. Do the others share this strong market position actually in terms of strategic positioning of Volkswagen? Yes, Edo.
I would like to point out even that China is the largest market for Volkswagen, but we must mention the fall of sales in Russia and Brazil. Russia fell down sharply, 36% in the first quarter, and we know that Volkswagen invested heavily in a factory in Russia. So I think this will have a negative impact on Volkswagen sales in those countries.
Okay, so we will come to the macro environment just in a second, but maybe I take this response also from Rakesh on the competition maybe before we move into global economy.
I definitely share the view as Sharmila expressed already. With Volkswagen having 12 distinct brands and products from passenger vehicles to motorcycles and also light commercial vehicles, with very good brands such as Scania and MAN. It is very well placed, and also in terms of market positioning, it is very strong in China, which is the most growing market at this point of time, and also other emerging markets. Okay. So Volkswagen is much better placed.
Okay, but I mean, maybe we do not just have competition between car manufacturers, but also between technology. And one statement I just want to pick out of your essay, Rakesh, was that the fuel cell technology is perceived as a threat by you. I just want to maybe get the opinions of the others. And the reason for asking this question is that we know that Elon Musk doesn't really like fuel cells. He has also given repeatedly also a recent statement where he's rather a little bit, has quite some distance towards this technology. Nevertheless, we also know that Mercedes-Benz has been quite heavily invested over the past couple of years into this technology. Is still probably one of the leaders in terms of technology, and Mercedes has also made a strategic investment in 2009 into Tesla. So I wonder sometimes if we really should compare Tesla versus Volkswagen, or whether there is not maybe a more strategic, based on this, this fuel cell discussion, whether there is not much more maybe like a combination of Tesla and Mercedes in the long run. Maybe it's not a combination of these two companies, but I guess they might be pretty powerful. The one more in fuel cell technology, and the other one in the battery, lithium-ion battery technology, which is pursued by Tesla. So don't you think that this is not necessarily a threat, but maybe rather important strategic positioning? So maybe first you, Rakesh, and then I hand over to Sharmila.
Yeah, I think Tesla is riding very heavy on one particular technology, that's lithium-ion batteries, and they're investing, from my perspective, a lot at this point of time, and that is a very kind of high-risk bet they're placing. While we see Toyota, on the other hand, they have had Prius that was introduced in 1997. So they had a lot of experience of working with batteries and plug-in hybrid cars. Even they have taken a strategic position of not to go in that direction and produce and bet heavily on lithium-ion batteries, but rather go onto the hydrogen fuel cells. So
Okay.
I think hydrogen fuel cells is one of the technologies that is a very high potential threat. But we also see other manufacturers such as I think Volkswagen is one which has some strategic investments in solid state batteries. And then we also see BMW trying to come up with a new technology where they can produce hydrogen from conventional renewable resources. I think there are potentially quite a few technologies that could inherently destabilize the value proposition we have with the lithium-ion battery technology right now, which would be a very big threat for a company like Tesla.
Okay. How do you look at this, Sharmila? Is it more posing a danger to Tesla, or isn't Tesla just the company to embrace new technologies right away?
I think every automobile company has sort of invested in research and development of technologies, cell technologies which are relevant to its automobiles. And this seems to be a characteristic of the typical consolidation phase that mature industries go through. So this is a welcome change, and so to speak, the competition right now seems to be too early to assess, given the nascent stage at which all the technologies are. But to point out, Tesla does have lofty goals in terms of building a super gigafactory, and currently it has even expressed its own inhibitions as well as inexperience in this area. So I see that as a threat for more of Tesla than Volkswagen.
Okay, great. So Edo, maybe you also have an opinion on this. So is fuel cell, is that an issue for your assessment of Tesla at all, or is this just a minor issue not relevant for the evaluation?
I think that Tesla for now have that superb technology, and I think that this would not disrupt Tesla in large scale. Maybe some further developments of this, but for now Tesla is secure with the high quality of their battery.
Okay, excellent. So I guess with this we could turn to the macro environment. And my question that I have to all of you is, I mean, we have seen some regional differences, and some of that has already been mentioned by you, particularly the slump in China and in the APEC region, which put some problems for Volkswagen. Also, you came across this in the HOLT analysis, the high cyclicality of the sales for Volkswagen in particular, but also the sensitivity in the luxury segment, which in a way holds for Volkswagen and Tesla. At the same time, we do know from Tesla, which has a stronger position in the Northern American markets than maybe in the APEC region, that they face severe difficulties in getting a foothold in the Chinese market. They had originally a target of 20,000 cars per year, and now we know that in January 2015, I just looked it up, they only sold 120 cars. Currently in China, there are about 3,500 Tesla only Model S operating, so it's far below the expectations. They even had to lay off managers after starting operations in China, so it's not really running into the direction that Tesla wanted to do it. We nevertheless know that the Chinese bought 80,000 electric cars in the year 2014. And one reason might be that there is a government subsidy also for Tesla Model S. They get $19,000 US as a government subsidy. So it's interesting. So obviously Chinese clients, they buy electric car, but they don't buy Tesla. Why is it so difficult to get a foothold, particularly in this very important market for Tesla, first of all, but obviously also Volkswagen, which seems to be a very interesting and extremely important market, but also there we have seen some difficulties. How do you look at that?
I think that in future years, the Chinese market will be the most important one for Tesla, and they must break through in this market. Last year, they have a problem with supercharger network in the China market, and that's why they need to pull out cars from China, and severe problems incurred in last year. But even they missed estimate for the last year, I think that the China market will respond well on Tesla, and in the mid run or in the long run, the Chinese market would be the one of the biggest markets for Tesla. I read some articles about some cities in China. The cab drivers are acquire 100 Tesla S models in their network. So we can see some positive movements in that direction, but I agree that is not enough. But in the long run, I think that Chinese market will be good for Tesla.
Okay, so Rakesh, how do you think about this? Will it change in the Chinese market for Tesla when they introduce maybe new models like the Model X or the Model 3 in 2017? Or is it maybe a larger problem?
I think Tesla have been in their projections. They have considered China as a very high potential market, but they have really struggled to deliver that. And I see more problems coming in. Even after they launch different products, there will be stringent competitions from the other competitors. So we see GM coming out with their vehicles, Toyota with their fuel cell technology, Volkswagen with their e-Golf and other products that will be competitively priced. And these companies have very stronghold in countries like China. And then they can use their network and their already placed distribution network to sell these models much better than how Tesla can sell its models. So I see more problems for Tesla in China. While compared to if I look into Volkswagen has significant potential market in the US where the prices are much higher, and they could sell much more cars in US, so their market proposition would be in a more positive sense compared to Tesla, who already have significant market in US, but they would more likely struggle in China.
Okay. So appointing views also on this. Interesting. Sharmila, what is your opinion? Are you very positive, more or less along with Edo, or do you rather have a skeptical view regarding Tesla?
The view that I have is Volkswagen is very well received. The brands of Volkswagen are very well received in China, especially the luxury cars. And for Tesla, I think they have a significant opportunity back home in North America. They're also facing a lot of turmoil given the sales the direct sales ban and the fact that they have to go through auto dealerships in many significant states. So I think Tesla should sort of focus now on its home country as well as expanding into the European markets. And then China would also probably open up itself to Tesla and be more favorable of Tesla's products. So in terms of China, Volkswagen is clearly more of in the advantage, not only when compared to Tesla, but also a lot of other brands as well. And Tesla should focus more on its home and European markets.
Okay. Now, when we talk about the macro environment, it's not just competition, it's not just sales we have in these markets. We also have issues like oil price. We have issues like US dollar appreciation, as we are seeing right now. Which company do you see more at risk, or maybe we also have some opportunities there in the one or the other direction? So oil price and US dollar. How do you assess these two elements for both of the companies, Rakesh?
I would definitely place both US dollar appreciation and oil prices decline to the advantage of Volkswagen, because they still have significant potential to sell more cars in the US and then get more revenues in high dollar price, and they have more production bases in Europe and rest of Asia than in US. And with the weakening of prices in oil prices, we definitely see the value proposition of electric vehicles going down. And then Volkswagen has still a very high technological advantage and production capabilities of IC engine-based technologies, but also plug-in hybrid vehicles, which they will be able to sell much more compared to Tesla selling electrical vehicles at premium prices?
Sure. I mean, we do have these direct effects, and they're pretty obvious coming from the oil prices. Nevertheless, I think there might also be an issue for Tesla. I don't think that Tesla is just benefiting if oil prices are rising. Probably it also must have I guess it must have an impact also on production costs and shipping and material, lots of things which are kind of difficult to assess. Now, coming maybe to the US dollar appreciation, or at least currency risk, which we have US dollar versus euro, maybe also US dollar versus the Chinese currency. How do you think that this is impacting the sales of these two companies?
In terms of US dollar appreciation, I see Volkswagen clearly benefiting given the fact that it exports to US, as well as the current decrease in euro as well will make the price of Volkswagen competitive. And for Tesla, I see the current US appreciation being a hindrance, but not necessarily the biggest hindrance. But it is definitely a hindrance worth considering for Tesla. And also the fact that it is also trying to shift a lot of its production in the Netherlands as well. Tesla may also have an indirect gain in the US dollar appreciation.
Okay, very good. Yeah. Do you have anything to add on this, Edo, or is this more or less your point of view as well?
I'll go with this with my other participants. The US dollar appreciation will be a negative for Tesla, but I think that this is just one of the risks, and they must cope with that.
Okay. So with this, I think we understood where the business models are. We have talked about competition. We have also talked about the macro influence, and essentially enough to start with a discussion on the valuation. Now we do know that for any kind of valuation, we need a comparable company analysis. Both for multiples, we need to know which might be comparables in the market, but also for a DCF, we need to understand where discount rates, for instance, come from. How do we extract growth rates from competitors, things like that. So where would you draw or where would you select the comparable companies for these two companies from? Are these really comparable, these two companies, or what kind of impact does it have in terms of your anchoring points, in the public market? To which company would you compare Volkswagen, for instance, when it comes to assessing the valuation of Volkswagen, and to which company would you probably try to compare Tesla when it comes to a fundamental evaluation of Tesla? So maybe I start with you, Sharmila.
With Volkswagen, I would compare it with BMW and Toyota predominantly because they have a similar brand portfolio, they have similar market presence, and also a very similar operating environment. With the Tesla, given its niche and the lack of competitors in the same space, I would compare it to the auto industry and the several auto players, just to put it on a benchmark rather than make a direct assessment.
Okay. How would you value Tesla? Which comparable companies would you select, Rakesh?
Given that Tesla is a kind of startup which we have not seen in automotive industry for quite some time, it's very difficult to come up with a specific company that we can compare to. So I took a different approach, and I tried to look into a similar innovation that was introduced in the market in 1997 by Toyota in the model as plug-in hybrid Prius. And if I look into how much they contributed in terms of sales of that particular model, I tried to use that to model the growth rate for Tesla. And what I basically noticed is it did increase the growth. The growth rate was there. The number of sales of Toyota Prius increased substantially over a 10-year period. But since 2010, it has also started declining as the competition has picked up. So I would model the growth rate on that model basically, rather than comparing it to different specific companies.
Okay, so Edo, is it just a matter of company maturity, startup? Certainly, I think we all can agree with this. Or should we also select comparables maybe from another industry? Is the car industry the right one, or do we need maybe IT software, some other comparables like Rakesh also suggests from maybe the late 90s? How do you think about this, Edo?
I will go with Sharmila on Volkswagen comparables, and also Tesla is very difficult to compare with other companies. I think that the clear picture of where Tesla is going, we can see maybe in software industry earlier, and compare it just with the US automobile industry, just to see where Tesla can go further. For now, it's very hard to find comparable with Tesla because of startup, and Tesla is in a growth phase of life cycle, and we can't find the right one to compare with Tesla.
Okay, so I think I fully agree with what has been said. Clearly, if we try to calculate the implied growth rate, for instance, based on EBITDA or also on the EBIT, which until pretty shortly has been negative at all, we come up with huge growth rates which are implied actually in the valuation of Tesla. Now let's assume that Tesla is able to meet the expectations which are currently priced in the stock price. We know that's implying very high growth rates, even given a pretty low cost of capital at the moment. It still means growth rates must be quite substantial. Do you think there is a chance actually to live up to that? And if so, what does Tesla need to do to live up to the expectation that stock market investors are currently expressing? Sharmila, how do you think about that? Is Tesla able to do that? And if so, what does Tesla need to do?
I think Tesla will not be able to do that. Having said that, I would say that it is in the right direction, given its investments. It is also coming up with a new car in the $30,000 segment, as well as it is trying to cater to the mass market. So it is also investing in its supercharge network stations. So it is moving in the right direction for the public to accept plug-in cars, and this will definitely show an exponential increase. But having said that, it would not definitely match up to the expectations that are currently priced in the stock price.
Okay, I might maybe add a further point while extending these questions to the other two colleagues. Namely, there is also something like corporate governance. There might also be an issue when pricing a company at the stock market. So living up to its expectation, and do you think that corporate governance between these two companies, and particularly the corporate governance in Tesla, is something which adds to the valuation of this company from stock markets perspective, or is it rather maybe leading to a discount? So is it combination of business model and expectation, but on the other hand also issues around corporate governance? Edo, what is your view on this?
I think for Tesla we have Elon Musk, a visionary of this time. But we must mention that Elon Musk is not only on this company. Elon Musk is the chief executive of Solar City, and maybe if he enlarge engagement in a Tesla, the Tesla will benefit from this. And also Tesla is a company that maybe vision like Apple. We have that one time, so we now know that Apple is one of the greatest company of the modern time. But we will see what will happen with Tesla. But I believe that Elon Musk will lead company in the right direction.
Okay, Rakesh.
Yeah, I think from my perspective, Tesla has huge expectations from the market, and it would be very difficult for it to deliver that. Although it is making good progress in terms of selling EVs, which I think will still have some market in the marketplace, and Tesla would kind of perform pretty okay in that niche segment. But if it really have to deliver to those expectations, it will have to massively go into some more products and revenue streams, such as it's trying to break into the energy storage market. But I think that will add to its revenues, but it will still have to come up with different kind of products and different kind of technological offerings that will be significantly kind of have a big market that it can deliver profits on. Having said that, in terms of corporate governance, I think one of the main factors that have been fueling Tesla's price is the presence of Elon Musk and his big kind of expectations from the company. But at the same time, we also know that he has been spending more than time what he expected to spend, and he's not likely to remain CEO after the Model 3 is launched. And then we would see a significant risk as well that after Musk has left the kind of leading position, how well Tesla could keep on at least making the speculation that it can be really high growth company.
Okay, I think that's a very important point. I mean, we know this also from other companies. There might be like superstar CEOs. That's also terminology in finance literature, as you may know. At some point, the company is just moving into a more mature stage and needs a different setup. I think this leads us to the final point, and also we already touched upon some aspects of risk analysis, and I just want to maybe focus on three essential points, which is first of all the financing of the company, secondly also the liquidity of the company. I mean, it's might be useful to have a nice valuation, but ultimately the company also needs to have enough cash to do its investment and to survive at least in the short run. And thirdly, the operations, also production capacity, calculating the break-even number of cars, that's one thing, but really having the capacity to do so in all the markets, that's another storyline. So financing, internal, external financing, first of all, then secondly, liquidity, and finally, operations. How do you think that Tesla on the one hand, but also Volkswagen are able to cope with that? Sharmila.
In terms of financing, Volkswagen is clearly the better choice given its ability to generate cash as well as profits that it flows back into its company. In terms of operating stability, Volkswagen has clearly shown a very stable cost management as well as internal operating environment. So Volkswagen is clearly favored, and Tesla, on the other hand, relies on external financing predominantly, which is a very risky dependence, and at the same time, it is yet to break even. It is yet to show a significant profit. It has been a consistently loss-making company. So clearly, Volkswagen is a better choice in these three aspects.
Okay, and how about liquidity? How do you assess liquidity and operational elements?
Volkswagen has been producing operating cash, so it is a fairly liquid company also in terms of its cash ratio and quick ratio, whereas this is not seen in Tesla, given the fact that it has not yet been able to produce cash. So it would be irrelevant to compare the two ratios with Volkswagen in terms of liquidity.
Absolutely. Edo, do you have some more comments on this, or do you share more or less Sharmila's point of view regarding external and internal financing and liquidity?
I just want to add that Tesla heavily depend on incentives of U.S. government. Only for battery research and development, they adopt $600 million from the U.S. I think Volkswagen is in a better position, especially in including production. Tesla have also production constraints, but I think that with implementation of Gigafactory, those production constraints would go off.
Okay, Rakesh, how about you to conclude?
I would rather share both the opinions, but I would also like to add that having this incentive program specifically based in California, that has been to a large extent to the advantage of Tesla. But as it moves out to sell more cars in other markets like Europe and Asia, it will massively have to reduce down its cost structures. Otherwise, it would be even more difficult for Tesla to break even and make profits on the cars itself.
Okay. Okay. So I think we need to come to an end at this point. I think we covered quite many aspects and it was also quite controversial regarding particularly the valuation at the very beginning. Now I want to give you the opportunity to just give a short statement to each of you, and after this I try to conclude and I hand over then finally to Simon. So maybe I start with you, Edo, to give just a short statement, maybe some issues you wanted to communicate we didn't come over, or maybe some elements which were just very important and you want to tell us again.
I must admit that I am very bullish on Tesla stock. The three main reasons for these estimates are high potential future sales growth. Other reason is potential for market expanding, especially China market. And the third reason is increase in manufacturing efficiencies that will come with the implementation of Gigafactory. Also, I noticed various risks involved in this estimate, but if Tesla successfully overcome those risks involved in my evaluation, Tesla will outperform, and I see a high future growth potential for this company.
Okay. Thank you very much. Rakesh?
My opinion would still be pretty much on the same lines. I see Tesla as a good market entrant, and I would see Tesla as one of the niche players in the continued future. They will be one of the prominent players in the EV market, but I would still hold my opinion that the share price is currently overpriced. It would be very difficult for Tesla to meet the expectations it currently have, and compared to Volkswagen, which is very attractively priced, and I would see that stock as a much high performing stock in the short run compared to Tesla.
Okay, thank you very much. Yeah. Sharmila?
To summarize, broadly speaking, both the companies make very good investments, but at the current level, I would say that clearly Volkswagen has been, the stock has been beaten down due to its the various controversies facing it, especially with the chairman resigning. So it is attractively priced at this level, and one should enter into the stock. At current levels, 213 times its earnings, Tesla is fairly overpriced, and if the stock price has been bid up in the coming days due to the announcement that is supposed to be in the next 2 days. So at current levels, Tesla makes for a very overpriced investment, and one should exit the stock.
Okay, so thank you very much. I think it was an interesting discussion. I just very quickly summarize some key points. I think first of all, we have seen talking about the business model of Tesla and Volkswagen, that Tesla is certainly a very focused company on innovation. It has an important position also regarding the supercharger network. This has been mentioned several times by you. Very interesting also the point with the patent release, and particularly, and maybe also in connection with this patent release, the construction of the Gigafactory. So probably this is creating a very strong position of Tesla in the long run. However, we do know from the financials in the short run it's not that promising. Regarding Volkswagen, they're playing in the full range, I would say, from traditional car technology until hybrid, and maybe also sooner or later, rather in the near future, we will see fully electric powertrains. One element which was also important, we just slightly touched upon, was the financing business of Volkswagen, which of course has also some distorting issue, might lead to a higher valuation of Volkswagen as opposed to Tesla. Now the second element was clearly the competitive landscape. How do Tesla and how do Volkswagen manage the competition? And what I take away here is that particularly Volkswagen has a clear advantage in being very diversified, both in terms of difficult brands, difficult positions, also along the price scales of covering essentially all types of markets. We have also trucks, we have also motorcycles, apart from passenger cars. But it's also a matter, thirdly, of geographical diversification. from which Volkswagen to some extent might benefit. Of course, there are also some limitations to this when it comes to a worldwide economic slump. Nevertheless, I think there is some degree of diversification which makes Volkswagen much better positioned across different industries as opposed to a small company like Tesla. We've also talked about technology such as a fuel cell. Obviously, this is not seen to be much of the danger. It can be some kind of threat. As some of you argue, particularly Rakesh made this point, but I think it depends very strongly on how Tesla can embrace this new technology, or how other car manufacturers will probably use this technology. Thirdly, when it came to the macro environment, I think here also we had opposing views. First of all, we had Edo rather on the bullish side for Tesla, which was very good regarding also the Chinese market, even though we do see that Tesla has significant difficulties in getting foothold in the Chinese markets. You are quite optimistic, maybe not regarding Model S, but maybe with cheaper models coming up in the near future. While the two others were very optimistic for Volkswagen. Effectively, we do see that sales are picking up now after a pretty difficult period of time for Volkswagen. So we'll see how it turns out, but clearly Volkswagen, and that's also my opinion, is probably better positioned than Tesla in the short future. However, in the long run, we'll probably see how it turns out. Also regarding oil price and US dollar appreciation, I think that was quite an interesting short discussion. We have seen that Volkswagen probably is less exposed to US dollar appreciation, both in terms of its diversification, but also because of its production facilities. It has different marketplaces where they also sell their cars, while Tesla is still in a pretty much of an exporting type of industry. They're already setting up their production facilities in different countries, but clearly they are much more focused regarding exporting from the United States. The topic of valuation was very interesting. We have seen that we need comparable companies, and most of you were agreeing that Volkswagen, and that's what probably not the difficult part of the story, we need some comparables maybe from the traditional car manufacturers such as BMW and Toyota, and maybe we'll find a couple of others suitable here. On the other hand, it's quite difficult really to find a really good comparable company. And probably this also explains to some extent these large stock price jumps we have seen already from last week to today. Very significant changes also in the enterprise valuation, which probably goes back to this difficulties in having a proper fundamental valuation. And what it simply tells us is that the cost of capital on the one hand and the implied growth rate are very close together. Now, if we have a long-term dividend discount model or EBITDA growth model, whatever the model is that you take, but we have a very narrow gap actually between these two parameters in the equation, and ultimately it means that we just have a huge bet. Maybe it's a positive bet, but it's clearly some degree of bet when buying this company. Finally, corporate governance probably was not seen to be so much of an issue by most of you. It's just obviously a matter of maturity of the company. We're still in a startup phase, and it's clearly driven by Elon Musk, as many other successful startup companies, and sooner or later it probably move into a more mature stage. Finally, regarding the risks, I think we have seen here a very strong exposure, particularly of Tesla, towards external financing, and I absolutely see this point and share this view. And one of you also mentioned in the essay, it's going to lead to dilution and maybe also the strong dependency upon external financing, and that's still a risk that's there for Tesla. Probably they will manage step by step to switch towards more internal financing from cash flows, but still a very different financing profile when talking about internal financing versus external financing when we compare these two companies. Clearly, I have no worries about Volkswagen, and I definitely can share some worries when it comes to the valuation or the assessment of Tesla, and that also links very directly to the liquidity we need in order to survive in the short term. So that was it from my side. I think it was a very interesting and insightful discussion. I hope also it was okay for you to structure it that way and to walk along that path. And it was very interesting to share your views and also to have my view in this. And now I would like to hand back to Simon. Maybe you just give a short summary of this. Thank you very much.
Thank you, Pascal, for that comprehensive summary. I fear if I added a summary on top of your summary, I could not do any better. And I think you did the subject of the debate an enormous amount of justice. You certainly put the three participants, our three HOLT community members, through their paces. And I love the toing and froing and challenging our young analysts on their assumptions and seeing how far they could defend them and what evidence they had to support these propositions. This is all very much in the spirit of what we wanted to accomplish with this debate. I also want to applaud the three participants who really, I think, were put under quite a lot of pressure by my colleague here and did remarkably well. I think it was an extremely interesting debate and goes to show why profound differences, I think, in the valuation of companies persist, and perhaps ultimately why markets exist, right? Otherwise, if we didn't have differences of opinion, no one would trade anything. And ultimately here, I think we understood a lot of the different reasons for the divergent viewpoints, even if we didn't share every single assessment. So let me wrap this up by thanking Pascal, thanking our three participants, Rakesh, Edo, and Sharmila, for their participation in this HOLT Community Competition debate. And I want to encourage you and others who may have been watching this to participate in further competitions and to keep developing with us Project Firefly's initiatives in this area. Thank you all very much.